a two video series today. I'm going to talk about in these two video series what actions does a borrower need to take while in school to set themselves up for successful student loan repayment. And then the second video in the series is going to be what do you do from the time you graduate in grace period until you start repaying your loans to make sure you are in good financial standing for when you actually have to start repayment. Okay, those are the two video series. So the first, this video is going to be the first video in the series. And if you're watching the video on the grace period, you know you're in the second video, okay? So the first video, what is it that you can do to successfully take action now while you're in school, okay? What are the types of student loans that exist, how to make decisions around borrowing, and then while you're interning in the summers, what can you do to possibly pay off your student loans, and what does it mean to sustainably borrow? Okay, those are the three things I want to talk about in this video. So first off, the first topic is what type of loans should you consider borrowing? You fill out this application called the FAFSA. I always encourage, if you're a parent listening to this, to try to take out as few Parent Plus loans as possible. And I'm going to tell you why. It's because Parent Plus loans are always unsubsidized. There is no upper borrowing limit, which means that sometimes schools can offer way more Parent Plus loans than is sustainable for a potential parent to borrow, especially if they're considering retirement soon. It can be very financially taxing. And then I have a data point on the highest growing amount of debt balance per borrower is in the Parent Plus category. So be very careful about borrowing Parent Plus loans. That's my message to Parent Plus borrowers. I wanted to put a side note. It's threatening our retirement more and more. And so I want to put a plug out there. As an undergraduate borrower, you will most likely, if you are going to an accredited, reputable school, most likely have access to direct subsidized loans. Direct subsidized loans means that the government covers your interest while you are in school, as well as for the 6-month grace period post-graduation. It can be post-graduation or anytime you drop below half time. So if you want to decide, I'm going to take a year off, you drop below half time, 6 months after you drop below half time is when you have to start repaying. So I want to make that clear because 4 out of 10 borrowers never end up getting a degree. So if you drop below half time, that's when you have 6 months grace period after the day you graduate or drop below half time to the 6-month time period, okay? So subsidized loans means that the government pays the interest for the time you're in school as well as for that 6-month grace period. There are direct unsubsidized loans, which means the government does not cover that interest, which means interest is accumulating while you're in school, okay? There are, of course, parent loans, and of course, there are private loans. I recommend taking out as much federal student loans as possible because Congress sets the interest rates for undergrad versus grad school loans. Private loans tend to have higher interest rates, even if they show you lower interest rates while you're in school. A lot of them adjust, like Sallie Mae loans are known for adjusting, going up to like 13, 14%. I would try to avoid those types of private loans if you can. Avoid Sallie Mae or avoid loans that, I shouldn't speak negatively about one company, but avoid private loans that can adjust up significantly because it can mean that they are very hard to afford later, okay? Those are my tips on borrowing. Of course, try to borrow as much unsubsidized as possible. Schools may not have access to that much subsidized because they get graded, right? Graded. The universities get graded. If they don't make a certain grade, maybe they don't have access to as much subsidized loans, right? So your options may be fewer, but try to borrow as much subsidized loans as possible on the federal student loan side. That's tip number one. I do want to talk about what is sustainable borrowing. My rule of thumb is never borrow for your degree more than you believe your first year out earnings are going to be. So if you think your earnings is going to be around 60,000, 50,000, whatever it is, 70,000, 100,000, never borrow more than what you will earn in your first year. Better yet, try to stay under 75% balance to your first year income. That will keep you at a very sustainable amount of borrowing. People who tell me, oh, I'm borrowing 300,000, but I'm going to make 300,000. I understand that you're going to make a lot of money, but sustainable borrowing I would recommend people try to stay under, especially if it's at a very high limit, try to stay under 75% of debt relative to your first year income. Okay. Otherwise, a lot of people come out with more debt than their first year earnings, and it's extremely hard to manage unless, of course, there are options to go into an income driven plan. But I just like to encourage sustainable borrowing because it's also important to plan and know what you will make and to borrow accordingly. So if you're going to know you're going to become an elementary educator and you make less than an engineer, it's important that you should also consider borrowing less because you don't want to feel the heavy burden of having too much debt when your required payments are going to come. Okay. And we'll talk about in the next video why that balance is so important in planning for repayment, right? And then lastly, I want to talk a little bit about the debt type, what is sustainable borrowing. I would also say that this was the last point I wanted to make, if you have summer internships and various work opportunities while you're in school, if you know you're not going to become a public servant and you're going to go to the private sector, you're going to end up in a program where you're going to make decent money and you can start earning money now, it would be great if you can start paying the accumulating interest for your unsubsidized loans while you're in school. So for example, let's say you borrowed $4,000 a semester for the last 4 semesters, and now you borrowed a total of $16,000, and let's say $2,000 has accumulated. Even if you can't pay into the $16,000, but you can pay down that $2,000 of interest, that would be great to do with some of your summer internship earnings and or even earnings while in school. And the reason why is because after that 6-month grace period, the interest that's accumulated on unsubsidized loans will get added to the balance, and that will be how much you owe. And they will create your 10-year fully amortized student loan payment based on that interest plus that principal. So if you can pay down that interest while you're in school because you know you're going to go towards a job that you will have to pay off your whole balance. You're not going to try to get on an income driven plan. You're going to try to pay it off as soon as possible, and you're borrowing at a sustainable limit relative to your income. Then it would be great for you to go ahead and pay that interest that's accumulating from summer internships and or work opportunities so that your ultimate monthly payment is less when it comes time to pay. Okay. That was my takeaway for what to do while you're in school. 1, take out as much subsidized loans as possible. 2, understand what sustainable borrowing and what your future salary looks like. If that means looking for more scholarships, negotiating aid, student aid and financial aid, you should definitely negotiate that to lower your borrowing limits and or get more scholarships applying to private foundations in your local town. Even while you're in school, even if you're a junior, you can still apply to these. And then lastly, try to pay down interest while you're in school if possible. I understand that's not possible for everybody, but that will lower your payment when you come out of school. So click the link to the next video on what to do during your grace period for the next part of this video.